Here we go. We're live. Thank you so much for joining me. I'm Mitch Goldberg. You're watching my 4:30 live stream. This is your post-market show. We go over the top news of the day in the world of finance, politics, energy markets, etc. We talk about financial planning, interest rates, inflation, retirement. You name it, we talk about it. All so that you could take control of your money, so you could be the boss of your money and make the best possible decisions for your future self and for your family's future as well. Big news today. Markets finally, markets down quite a bit today. It was actually a pretty rough day in the major averages. We had, we did have a pretty significant run up from the lows of a few weeks ago. Why did it go down? Inflation, the core PC deflator that the Fed uses for measuring inflation, came in really hot. Not quite as hot as expected, though. So that is possibly a good thing. Oil came down a lot today, so you would think that would be good for the markets, good for the economy, hence good for certain stocks. Got a couple of things to go into. Technology stocks got hit. One of the stalwarts of the tech sector, Advanced Micro Devices, took a big hit today. We've got to talk about all of these things. And what else? Oh, how could we not talk about this? The big jobless claims numbers, the non-farm payroll report comes out tomorrow. That's, we say this every month. This is the most important non-farm payroll report ever. And it's true because there's so many things on the edge. Does the market go up or go down? The economy, recession, slowing growth. Where do we go? And there's so much indecision, and investors are like desperately searching for clarity. And here on Be the Boss of Your Money, we're always into clarity. But we do know that over the long run, you really just need to stay invested, ignore the noise, and focus on the things you can control. So let's roll the intro. We're going to have a good show today. A couple of things to catch you up on. Now, while you're watching, if you have any questions, hit me up in the comments. That's what the comments are for. I love hearing from you. Words of wisdom, words of encouragement, or just a hello is always nice in the comments as well. If you don't mind, give us a thumbs up or a heart or a celebration or whatever, depending on which platform you're watching from. We're streaming to Facebook, LinkedIn, YouTube, and Twitter. And let me know which one you're watching from as well. Here's the intro, and I look forward to seeing your questions in about 15 seconds. Here we go. All right, we are here. I just can't believe this week is almost over already. It's every Thursday night. I say to myself, how could this week be over? I'm really happy I'm able to get to this. I've had this. I've had this horrible cough now for like 2 weeks. My doctor said, just go get a chest x-ray. So I went. I'm like, I'm just not going to be able to do the live stream today. It's so busy today. And, you have to take care of your health, of course. So I went, but they got me in and out of there so fast that back in time to do the live stream, which I am, really happy about. So got a couple of things to talk to you about. There's interest rates, there's inflation, there's price of oil, price of stocks, tech stocks. This was a day that was like really interesting because there was a little something in it for everyone, albeit to the downside. But we could find the positives, the bullish things in the market as well. So it's not all too bad. Okay. And I see a few of you out there, and I see you, Tammy. Hey, thank you so much for joining me from Facebook land. Thank you very much. And thanks for letting me know where you're watching from, Tammy. Tammy is a new friend of mine on my personal Facebook page, and I'm glad you could join us. Jay is out there. Jay, thank you so much, and hope to see you soon, buddy. I know we're going to see each other, like a month or so? We're a little over a month. We've got our big SUNY Albany gathering. I love that. I just haven't done it in years. That's one of the things that I look forward to so much. Hopefully we'll get some nice weather. And so there you go. So what the heck happened today? Let's take a look at the major averages. And without further ado, Let me pop myself up in here. Oh, let me get rid of that. The social media. May 12th. May 12th. Let it be said, it is now permanently emblazoned in my live stream. Okay. So let's get rid of the social media icons. There we go. Okay. Well, the GameStop surges 10%. We'll look at that in a little while, just because the company is doing a stock split. I know people get excited when there's a stock split. I could see being excited over Amazon or GameStop. I mean, a 20-for-1 stock split, and it's just, it's hard for a lot of people to buy a stock that's $3,000 a share. Maybe if you only want to put $500 into a stock, or you only buy one share. And I know you could buy fractional shares on Robinhood and some other investment sites, but I think this democratizes the stock a lot more. And I'm not going to say what I have because I don't want to come off like I'm endorsing a stock, but I have excitement and enthusiasm for those multi-$1,000 price stocks when they split, because I think it brings in more investors into the fold. I think that's a good thing. Okay. Is that okay to say? I'm talking to you, Rita and Debbie. All right. I think I skirted that one pretty good. All right. Anyway, the Dow down 550 points, NASDAQ down 1.5%, S&P down 1.5%. So this is what's odd. The three major averages were all down slightly over 1.5%. Usually the NASDAQ is down the most, then the S&P 500, and then the Dow, right? So sorry to cough in your ear. But they're all down the same amount. This leads me to believe that there's some window dressing going on, that it's the end of the first quarter. Fund managers, money managers, whatever you want to call people who manage portfolios for a living do, they probably wanted to boot out some poor performing stocks on the quarter, maybe buy some stocks that were up a lot. I think ConocoPhillips was the first or second biggest winning stock in the first quarter. Energy did extremely well year to date. And year to date today means also Q1, just because of the way the calendar works. Gold up a drop, oil down a lot, down over 6.5%, almost 6.5%. 10-year continues to work its way a little bit lower, attracting buyers. The VIX was barely up. So, we talk about the VIX, the volatility index. And what I always say is if the VIX is, over 20, we have a down market, right? And if the VIX is under 20, it's bullish. Good for stocks. That's the way I see it, and that's been the consistent pattern. Okay, good. Disagree with me. Change my mind. I saw somebody post something in the world of finance. He's like, change my mind. Material things don't bring you happiness. And I, of course, agree with that. I think, as you get older, you realize experiences and time with friends and nature, things like that, is what makes you happy. Or in my case, time rollerblading. That's right. If you were watching this for the first time or you didn't know this about me, I love rollerblading. And unlike the rest of the people my age who went to high school and college in the 80s and early 90s, okay, I didn't get into rollerblading until I turned 49, 50, and I'm 54 now. I know. I don't look it. I know. This cough is terrible. I'm speaking tomorrow at my networking group's monthly meeting. About 80 people should be there. Breakfast will be served. It'll be set up an hour in my building's major conference room downstairs. And every time I put like 10 words together, I start coughing. I don't know how I'm going to get through it. And everybody will think I have COVID. Everybody will run away from me and say, why the heck is this guy talking to everybody? Oh, it's just going to be a freaking disaster tomorrow. Maybe I should have a better outlook on things. It's going to be wonderful tomorrow. It's going to be awesome tomorrow. All right, change the way you look at things. What the F was I talking about? Anyway, the first quarter, we'll go into the numbers. The VIX. Oh, yeah, we're talking about the VIX. What the F? Yeah, the VIX. So considering how bad the markets did today, considering how rough of a day it was in the street, Dow down over 500 points, the VIX was barely up. That's, it kind of tells me that it's a one-day wonder. It's window dressing in the part of portfolio managers because of the end of the quarter. So that has a tendency to depress stocks that are already depressed and push stocks up that are already up. Because that's called window dressing. You want your portfolio to look like you did a great job for your investors. So, see, I was in all the up stocks. As investors are only looking at what you had the last day of the month of the quarter. All right, so we'll have that to look at, and let's switch to another screen. Okay, let's look at bonds. So the 1 month T bill, 30-day T bill. Nobody really calls it a month T bill. Everybody calls it the 30-day T bill, even though it says 1 month here. Everything is basically changed fractionally. The 5-year is at 2.4%. The 10-year is lower, is at 2.39, 2.34%. So that's a part of the yield curve that's flat, but 2.339 versus 2.345. The yield curve is basically flat. The 2-year treasury is almost even with the 10-year treasury. This one is almost even with this one. And if the 2-year yield goes above that, then we're going to have a lot to talk about. It's going to be all over the news. Oh my goodness, the inverted yield curve. The inverted yield curve signals very, very consistently. Like the last 15 recessions or so were, 14 of the last 15 recessions were predicted by an inverted yield curve when the 2-year yield goes above the 10-year yield. It's not a perfect indicator, and just because we have a recession, and Goldman Sachs came out today and is saying the odds of a mild recession are increasing, I can understand that. We'll take a look at the article in a minute, but just because there's a mild recession, it doesn't necessarily mean that it has to be bad for stocks. In fact, by the time we do get into a mild recession, stocks will already start going up anyway because they factor in more Fed easing and we factor in a renewed oomph. Is that like a technical term in the world of economics? I didn't learn that in business school in SUNY Albany, the economic term for a recovering economy called oomph. But I think you get me, right? You get what I'm saying. And the reason I'm bringing up SUNY Albany is because I have a few new connections who I know from SUNY Albany who I've become friends with on Facebook, which is pretty cool. I'm pretty happy about that. So let's take a look at crypto. I know you guys like crypto. Oh, that's not what I want. Here we go. Crypto. Although I find the enthusiasm for crypto is waning. I used to get so many questions about crypto, like just people calling me up, people I run into at Starbucks. I know, what do you think of this? What do you think of Ethereum? Should I put money into it? I don't get that anymore. And something like 1/5 of all adults in the U.S. have now invested in crypto. So it looks like anybody who really wanted to get into it has gotten into it already. And by the way, I see you, Tom Moran. Thank you very much for joining. Okay, Tom's coming out there from Facebook as well as Jay. Guys, questions, comments, words of wisdom. I'm not supposed to ask for comments. I meant questions. Any questions, answer in the comment section. Okay. I love hearing from you. Let me know where you are. Okay. Bitcoin down a little bit. Let's see, Ethereum down 2.5%. Down 2.5%. It's not the biggest deal in the world. Where's that piece of junk? Doge down to 14 cents. Yeah, I just look at Doge because I remember Elon Musk touting it. It went to 75 cents. People bought it, and now it's 14 cents. What a disaster. Hopefully people didn't put a lot of money into it, but I think people are looking for the next Bitcoin who say, oh, maybe we'll go from 75 cents to 40,000 like Bitcoin. You never know what can happen. I'm not a believer. Okay. I'm not a disbeliever of the whole, effect of crypto. I'm not a believer in any of it, the blockchain, but I'm not a believer in most cryptos. And there are thousands of cryptos, and most of them I think will one day prove to be worthless. And hopefully you had fun. That's what I expect. Let's take a look at this. Tomorrow, the big number tomorrow, okay, is we expect to be a hot jobs number. Okay. Economists are expecting 490,000 jobs created in the non-farm payrolls tomorrow, down from almost 700,000 in February. But what we have to watch is the unemployment rate. Wages are expected to grow at 0.4%. Okay. And so we have to watch if there's an increase in wages. When we had 678,000 new jobs created last month, Wage growth didn't budge, which is why the market didn't go down on inflation worries from that. Now, I know the Fed's PCE deflator, their main inflation gauge, which is very similar to the CPI, the Consumer Price Index, came out a touch higher um, than the previous month, but it wasn't quite as high as expected. So maybe inflation expectations are a little overly built up. We could see inflation go down, by the way. If supply chain issues are corrected, things could happen over the next year or two that could be very positive. So I want you guys to keep your chin up. And whatever we talk about with the Ukraine war and inflation and debt and all these things, keep investing, keep saving for retirement, keep socking money away, keep investing. Don't stop investing in your 401k because because don't stop investing in your 401k because some pundit frightened you out of the market because they have something that sounds very ominous and intelligent sounding to say about the yield curve. Don't let these things push you. That's why I do this show. So you have the knowledge and expertise from me to you so you could stick with your plans. I have seen countless investors make all kinds of mistakes. I've seen many of these investors overcome challenges, and I like to share the mistakes and what people have done to overcome challenges. Yes, of course, hiring me as your financial advisor is like the best thing that anyone can ever do. I'm only kidding. Come on, listen. Hiring a competent financial advisor who gets you is a great thing. That's what counts. I don't, me or somebody else. That's not the point. I think there are always the right financial advisor. I think there's always the right financial advisor for the right client. So if you have somebody you like, you stick with that financial advisor because you found a gift. People who come to me, it's because new clients, it's because they are dissatisfied with their current service provider. And so there's a reason to make a switch. So if that's you, let me know. All right. What else do we have to see here? Let's take a look at the meme stock since everybody's going to be talking about GameStop tomorrow. All right. Meme stocks are fun. That's all. It's fun. I don't take these things overly seriously. All right. But let's look at the after hours, extended hours trading. Okay. So I was able to do that. It's like magic. GameStop up $25, up 15%. It's had a big move. I just put out a meme that wasn't too positive about meme stocks, but nonetheless, GameStop's high is I think $600 or $700, 192 in aftermarket trading. Once these start to go up, they usually have a ways to go, just because maybe there's a short squeeze or they're mostly owned by retail investors who like to get into this stuff and push them higher. We'll see. Who's gaming the system? I can only imagine. I have my ideas, but I don't want to get into that. So we went into that. Okay. And now let's take a look at the first quarter. All right. So the first quarter and first quarter and year to date, obviously, because it's the last day of the pay period, is this. Okay. First quarter, Dow and S&P, respectively. Dow is down 4.8%, S&P down 5.2%. So let's just say they were down 5%. Worst quarter since the first quarter of 2020. Remember March of 2020, the market swooned because of the COVID pandemic. NASDAQ was down 10% for the quarter. And I want you to know that these are like such normal things to happen. Like people are like, oh wow, worst quarter in in exactly 2 years. March quarter of 2020, March quarter of 2022. Who cares? I mean, 5%, and it's just amazing that people are so investors are so jaded that it's such a big deal to be down 5 or 10% in a major average. This is normal, folks. What was not normal was that we had a year and 3 quarters. Okay, so 7 quarters of such consistently strong returns. That's what's not normal. What we're having now, 5 killing me. 5 to 10% drops. This is like normal stuff. Don't make such a big deal about it. All right. Let's talk about oil. Okay, President Biden is saying they're going to release, his administration is going to release 1 million barrels of oil per day from the Strategic Petroleum Reserve to help tamp down inflation. What do you think? Do you think that's a good thing or a bad thing? I think a lot of people would say, "Oh, it's a good thing. Let's make it easier on the consumer, bring down the price of oil, bring down inflation." And okay, so this is what some of you are going to say, and I really can't disagree because of the timing. But we have the midterm elections coming up, and right now, President Biden's approval rating, is pretty low. He gets high grades though in other areas like handling the Ukraine matter. And I know some of you are going to be like, "No, I don't think so." Okay, I'm just telling you what I see in the polls. I don't want to get like, I don't want to get overly political here. I'm just saying, but his approval rating is really yuck. It's the lowest of his administration. He started out pretty high and sinking ever since. Why? Because of inflation, and consumers just hate inflation. People are suffering. Think about what it costs to fill up the basket of your shopping cart at the grocery store. And you're like, how the hell? Like the other day, I took my kids food shopping. I'm like, how the hell did I spend $300? And then like 2 days later, the kids are like, we have nothing to eat. Although there is food to eat. I have to say that my kids are so spoiled. They want what they want when they want it. Like, I'm like, we have food at home. You can't just order sushi or Chipotle whenever you want because that's what you're in the mood for. Look, that's parenting stuff. We'll talk about that another day. So whatever, inflation is up there. But anyways, Strategic Petroleum Reserve. Biden's releasing oil. We have the midterms coming up, so it's April, okay, month number 4 to month number 11. So in 7 months, we have the election coming up. And maybe, we want to get inflation down because it helps the consumers, but, it's probably a good thing to get inflation down if you are up for an election or re-election coming up. So anyway, we want to reduce pain at the pump, but I'm not into releasing oil from the Strategic Petroleum Reserve unless it's a dire emergency. And paying a little bit more for gas is not an emergency for most of us. I'll say that. For the overwhelming majority, it's not an emergency. What happens is when you put more supply in the market, it disincentivizes oil companies from drilling for more. We want more energy supply because we want more energy supply from the ground, not from the Strategic Petroleum Reserve. And I know some of you wise asses out there to be like, well, Mitch, the Strategic Petroleum Reserve, part of it is underground. Yeah, I get that. It's like in old salt mines. But that's not what I mean. We want to incentivize more drilling, more oil production. The cure for higher oil prices is higher oil prices, and the cure for low oil prices is low oil prices. If you recall, a year ago, the price of oil, not only did it go down to zero, it cost nothing for oil. It went to negative. In other words, if you had oil, like if you wanted to buy oil, somebody, instead of you paying money to buy oil, somebody had to actually pay you to buy the oil, not to sell it. It was crazy. And when demand dried up, drillers stopped drilling, closed up wells. This was a worldwide phenomenon. And all of a sudden, demand for oil exploded as we've come out of the pandemic. It's a supply issue. It's not so much a political supply issue, okay? Oil companies have spent, in the last 2 years, tens of billions of dollars on stock buybacks and dividends and becoming more financially disciplined as opposed to just drilling for as much oil as possible when oil is up to try to beat the clock before the price of oil goes down again. That's how the oil industry functions. Not anymore. It's kind of like the airline industry. It's become a very disciplined, profitable industry, whereas my entire career, you would never own an airline stock. And now airline stock is like, these are good companies because they have financial discipline. Same thing with the oil stocks. I'm talking this not oil stocks of. I'm talking the stocks of oil companies. If you didn't notice, so that's where we are. But that's like a really big story. And the last one I want to show you is the title is pretty interesting. Okay. Goldman sees risk rising for a mild recession, but not for at least another year. Written by Jeff Cox, who is someone you should definitely follow on social media. He puts out, he's the main writer for CNBC. It's just, he is, I don't know how, he's like a machine. He puts out so much content. He's a really nice guy. I feel like if I was president, I would make him, Federal Reserve chief. He would be the chairman of the Federal Reserve Board, in my opinion. He knows so much about this stuff. So Goldman Sachs is saying mild recession. The risks are there, okay? But a mild recession doesn't mean things are so bad. And he's talking about an inverted yield curve because it's all we talk about these days. So what do you think? You think we're heading into a recession? I don't think we could really know for sure. I think you're fooling yourself if you're guessing. If you want to prepare for a recession, what this does point out to you is this. If we do go into a mild recession and then we have the inverted yield curve and another recession comes along, this is what you need to do to prepare. If you are closer to retirement, maybe 5-10 years away, now would be a good time to consider scaling down your exposure to the stock markets, bringing down your risk metrics, your personal portfolio risk metrics. It would also be a time to maybe bulk up on your resume. Maybe now would be a good time to earn that new designation, show a new employer that you indeed are taking serious steps to improve your education, improve yourself, and improve the potential job you could do for a potential new employer. Because when we do finally have a recession, I think the great resignation ends because people are very bold about quitting a job and saying, I don't have to get another designation or whatever, or more continued. I can get another job anywhere for more money. That's not going to last forever. Okay. More and more people are being replaced by computers, by technology. And when we have the next recession, there will be layoffs, and then it'll go back to, an employer's market as opposed to a worker's market. So you should take steps to shore up your own personal finance, save some money, build up your emergency savings, and make sure you are the type of employee that an employer would want to hire. You want to do that now before the next recession. And I always say this, don't wait to start networking when you lose your job. Don't be one of these people who says, oh, I lost my job. I'm on this job search. I sent all these resumes out. I don't hear from anybody. I'm going to start networking and meeting people and going out to events. Don't be that idiot. Okay. I can't stand when people do that. I'm like, it's so stupid. I really mean that. I'm frustrated when I hear that. You need to do your networking while you have a job so that if you do need a new job, you already have the relationships in place. Spruce up your LinkedIn profile now. Start interacting with people on LinkedIn now. Don't wait until you need to get noticed and you need to get the attention of a potential employer and build your network. You're supposed to do that now while times are good, because think of your network, your personal, your professional network. Think of it like this. It's like a bank account. You need to make a lot of deposits in it because when we do go into a recession, and if you do get laid off or your firm closes, you're going to be making withdrawals out of that business network account. So if you're not putting deposits into it now, you're not going to have any withdrawals to take, and you're going to need that. So network now, network often, network well, and don't wait until you don't have a job, because once you don't have a job, people look at you differently and say, well, why doesn't that person have a job? I don't even know that person, but I know they don't have a job. And that's all the impression and that's going to be the entire impression that people are going to get of you. That's all they're going to take away is, oh, you don't have a job. Meet them when they have a job so they know that you are, in fact, a good person, a good employee, all these things. So that when you do need the job, you've got the relationship. So people say, yeah, no, that person doesn't have a job now. That's why I want to help them. That's what networking can do for you. Don't wait. Thank you so much for joining me today. I'm going to get going. If anything crazy in the market happens tomorrow, I'll do a quick impromptu live stream to update you and explain to you what's happening. If not, it's just going to be a spring Friday, a little cold and soggy in the Northeast. But nonetheless, I hope you guys are all on your way to a nice weekend. Speak to you soon. Thank you.